Welcome to Market Watch Daily, where we cut through the noise to find the signal. And wow, the market is sending a ton of mixed messages today. So we're going to break down the 5 key stories that you absolutely need to have on your radar.
That's so true. From what's happening in tech to Wall Street to what's going on in global shipping, it is all connected. So let's get right into it.
Okay, here's what's on the docket. We are starting with the billion-dollar question that is just hanging over Apple right now.
Then we're going to jump into the wild ride in the energy markets and try to figure out what the Fed is planning to do about all this.
After that, we are untangling the supply chain mess that just never seems to end, and then the high-stakes game being played with semiconductors.
And you're going to want to stick around because at the very end, we'll consult our, let's call it, alternative data source with our special investment fortune.
All right, first up, our top story. Apple, after its latest earnings call, the tech giant is really under the market's microscope. There are some serious questions being asked about where the growth is going to come from next. And what's really telling here is the market's tone. It's not panic, it's caution. You see analysts really digging into the company's future guidance, and they're flagging a potential slowdown in iPhone demand. The big debate is this just a little hiccup, or is it the first real crack in Apple's armor? And this chart, it just lays out the core tension perfectly. You've got these two massive forces pulling in completely opposite directions. On one side, you have the very real worry that hardware sales are hitting a ceiling. And on the other, you have all this pressure on the services division, the App Store, iCloud, all that stuff, to basically carry the entire company. It's a real high-wire act. So for anyone invested, it all boils down to this one question. Does Apple have enough truly new stuff in the pipeline to justify its massive price tag? It's really a tug-of-war between faith in their long-term vision and some very real worries about their hardware in the short term. Now, that whole theme of uncertainty isn't just in the tech world. Let's shift gears and talk about energy. We are seeing some huge swings in the oil markets, with prices just all over the place. So what on earth is going on? Well, it's not just one thing. It's more like a cocktail of pressures all hitting at the same time. You've got geopolitical tensions simmering. You've got OPEC Plus constantly threatening to cut production. You've got those supply chain problems we just talked about, and a global demand that's bouncing back stronger than anyone expected. It's a recipe for chaos, really. And look, this matters to absolutely everyone, even if you don't own a single energy stock. Why? Because these costs ripple through the entire economy. They hit airline profits, they drive up shipping costs, and eventually they show up in the price of, well, pretty much everything. Seriously, those numbers at the gas pump are one of the best crystal balls we have for the economy. And speaking of economic pressure, that brings us right to the Federal Reserve. Right now, it feels like every single word, every pause from the Fed chair is being put under a microscope by investors trying to guess the next move on interest rates. Right, and you keep hearing this term everywhere, hawkish signals. So what does that even mean? It's simple, really. It just means the central bank is signaling it's about to get tough on inflation, even if that means slowing the economy down. They're basically warning everyone that higher interest rates are coming. Exactly. And because of those hawkish signals, the whole market is now bracing for what they're calling a higher for longer interest rate world. The thinking has shifted. People are now pricing in the reality that rates aren't just going to go up, they're going to stay up for a while. So the really important question you got to ask yourself is, what does a more aggressive Fed actually mean for you? Because this isn't some abstract concept. It directly hits your mortgage rate, your car loan, your credit card debt, and of course, the value of your entire investment portfolio. And one of the main reasons the Fed is being so hawkish, well, it leads us straight to our next topic. It's a problem that just will not go away. The global supply chain. We keep hearing it's getting better, but the whole system is still just so fragile. What's so interesting here is how the problem keeps changing shape. It's not one single issue. It's like a game of whack-a-mole. First it was jammed up ports, then it was lockdowns, then labor shortages, and now we're just stuck with these stubborn bottlenecks. You fix one link in the chain and another one just snaps. And the fallout from all this it's massive. These problems directly feed inflation. They squeeze the profits of so many companies, and they create this huge gap between the businesses that were prepared and the ones that weren't. At the end of the day, it's just a major drag on the whole global recovery. Okay, for our last big market story, let's talk about something incredibly small that's having a gigantic global impact: semiconductors. These tiny little chips are the brains behind our entire modern world, and they've become this huge battleground for both investors and entire countries. And this slide just perfectly sums up the dilemma for investors. On the one hand, the bullish case is so strong. You've got this explosive demand from AI, electric cars, data centers, you name it. But on the other hand, the risks are just as huge. You're talking about major regulatory fights and, frankly, intense geopolitical tensions over who controls these things.
So the big takeaway here is that investing in chips is not just a tech play anymore, not by a long shot. Anyone putting money here is trying to balance that amazing long-term growth against some really serious short-term volatility and the massive influence of national security. It's a wild ride.
Okay, we have gone through all the data, the analysis, the strategy. Now, as promised, it's time to completely shift gears. We are going to consult our highly unscientific, for entertainment purposes only, crystal ball. It is time for the investment fortune. And let me just add our official disclaimer, please do not base your life savings on what you are about to hear. All right, let's see what the stars have for us. Okay, for anyone whose sign is the tiger, the stars are saying a powerful current is moving in your favor. Your conviction might get tested, but fortune favors the bold. The message seems clear. Be bullish on your research. But for all the rabbits out there, a little word of caution. The cosmic winds are looking a bit choppy. This might be a day for playing defense, not for being a hero. The celestial advice: focus on protecting that capital. Which, brings us to our final thought for the day. In a market that is this complicated, pulled between hard data, your own gut feelings, and, well, the stars, what is it that truly guides your strategy? Is it the cold, hard numbers? Is it your intuition? Or maybe, just maybe, it's a little bit of both. Something to think about. Thanks for joining us.